Wall Street is aggressively dumping software stocks, with some firms seeing double-digit drops, as growing fears of AI disruption trigger a market doomsday scenario. Wall Street is in a state of alarm. The software sector, once a darling of the market, is experiencing a sharp sell-off, with some key stocks plummeting by more than 15% in early 2026. Investors are gripped by what many are calling AI destruction fears, convinced that artificial intelligence isn't just a new feature, but a fundamental threat to traditional software business models. This isn't just about big companies, it impacts mutual funds and retirement accounts across the board. This dramatic downturn isn't an isolated incident. Software as a service stocks, a significant part of the sector, were down 15% in early 2026 alone, following an 11% drop in 2025. This marks the worst start to a year for software stocks since 2022. The selling intensified after a new AI tool from startup Anthropic demonstrated capabilities that directly challenge existing software, particularly in areas like legal services and data automation. This accelerated a trend that had been building towards the end of last year. What's driving this panic? Investors fear that AI will automate tasks currently handled by expensive software, or that new AI-native competitors will emerge with more cost-effective solutions. Traditional software models, reliant on recurring revenue, are now seen as vulnerable. Bryan Wong, a portfolio manager, highlighted the speed of change, stating that the pace of change is about as fast as I can remember, and that makes things about as uncertain as I can remember. Profit growth forecasts for software firms in the S&P 500 are expected to decelerate from 19% in 2025 to 14% in 2026. The impact is broad, hitting major software and services names. Companies like Intuit tumbled 16%, while Adobe and Salesforce both sank more than 11% following AI news. Legal tech firms, data service providers, and even payment companies like PayPal saw significant drops, with PayPal plummeting over 20% due to disappointing results and weak 2026 projections. State Street Software and Services ETF collectively lost nearly $300 billion in market value. This isn't just about software. It signals a rotation of capital away from traditional software and into other tech segments like memory and AI infrastructure. Analysts are divided on the path forward. Some, like Jefferies analyst Samad Samana, believe investors will return to software when growth aligns with AI revenues, arguing that AI is unlikely to fully displace B2B SaaS solutions. Others, however, see deep-seated uncertainty. Bryan Wong from Osterweis Capital Management states, "The pace of change is about as fast as I can remember, and that makes things about as uncertain as I can remember." The consensus is that 2026 will bring market volatility, but a solid year overall for the broader market. Still, the software sector's immediate future remains under intense scrutiny. The AI destruction fears on Wall Street are a clear signal. The rapid evolution of artificial intelligence is fundamentally reshaping how we view entire industries. This isn't just a tech story. It's a story about adaptation, disruption, and the relentless march of innovation. Companies that strategically embed AI into their core operations, rather than fearing it, will be the ones that thrive. The market will continue to be volatile as industries navigate this profound shift. It's a reminder that constant evolution is the only constant. This is Geese Reports.